Before you invest, I'd like you to remember these two important quotes. The first, from Peter Lynch, invest in what you know. The second, from Warren Buffett, never invest in a business you can't understand. The reason I brought these two quotes up is because owning shopping malls in Singapore is perhaps the easiest investments that you can find. You'd probably head down to VivoCity, Plaza Singapura, Paragon, Gem, Next, or even Causeway Point during your weekends. You can see for yourself how is business doing over there, and maybe for your own, you're even spending a lot of money, a lot of time in your favorite mall itself. The list of malls that I've just mentioned are all very popular malls in Singapore, and they are all actually owned by different REITs. So if you're thinking which is the best REIT to buy right now, continue watching on. Hi guys, welcome back. Let's start by breaking down who owns exactly these popular malls. The first, VivoCity. That's actually owned by MPA City, which has some overseas assets and business parks. The second, Plaza Singapura, is actually owned by CICT. CICT is actually a merger between the malls part as well as the offices. That's why they have a lot of income coming in from the office segment. What about for Paragon? I'm going down there quite a bit more because there is an indoor playground for my little one to have some fun over there. So I'm also thinking, why can't more shopping malls have an indoor playground to draw in families? Because that's the reason why I'm going down to Paragon, correct? The next, Gem. Gem is recently acquired by Lendlease. The how about for Next and Causeway Point? These two malls are actually owned by Fraser Centrepoint Trust. Next has a special place in today's whole discussion, and Causeway Point is actually the biggest asset that Fraser Centrepoint Trust owns. Of course, this list is not exhaustive, but for today, I'm going to tell you why I rate Fraser Centrepoint Trust very highly. Let's move on to the first part of today's discussion, which is help you understand what does Fraser Centrepoint Trust exactly own and what they have done along the last 5 years. Take a look at this slide over here. You would realize that they own Causeway Point, North Point, Waterway Point, all of which are in the North area, Hougang Mall, White Sands, Tampines 1 and Century Square. All these are in the east. So it really feels like Fraser Centrepoint has conquered northeast of Singapore, other than Tiong Bahru Plaza. I have no idea why they don't have anything in the west, but actually if you look back in terms of history, they once owned UT Mall. Recently, Jurong Point was actually up for acquisition, and Link REIT was a surprising winner from that whole outcome. Maybe Jurong Point fits this whole portfolio, but Jurong Point is quite expensive. With or without Jurong Point, Fraser Centrepoint Trust is now the largest owner of floor space for suburban retail malls. They've overtaken CICT very recently. I'll give you a bit more details in a while, so continue watching on and smash the like button early, especially if you believe there's good quality content coming up in a short while. Right now, Fraser Centrepoint Trust owns 10 retail malls and 1 office tower, which is actually beside Tiong Bahru Plaza. Understanding what they own is important because that leads to segment number 2, to understand what is their track record so far. The first thing that investors always keep track is the dividends per unit. That impacts your books, correct, as an investor. How much dividends you would be getting. Happy to present, this is what they have shown over the last 10-15 years. Fantastic consistency, correct? If we don't count in financial 2020, which was impacted by COVID, this would have been a very steady climb and a very assuring track record. I've actually covered Fraser Centrepoint Trust in last year's JOSH TAN Finance Summit. This year, big thank you for all of you who have bought tickets already so far. I'm looking forward to seeing you in the coming weeks ahead. Seats are selling at $69 each. If you're keen to get your questions answered and if you're keen to learn, look for links below to purchase your tickets right now. Now back to Fraser Centrepoint Trust. Let me give you a brief history of what they have done so you can see for yourself their track record of executing things. Back in 2020 September, they've actually acquired the remaining 63% stake of Asia Retail Fund. That brought in Tiong Bahru Plaza, White Sands, Hougang Mall, Century Square and Tampines 1, plus Central Plaza, which is that commercial building beside Tiong Bahru Plaza. This whole exercise expanded their portfolio, and actually back then, they raised $1.3 billion for this mega acquisition. Take note again, the price they listed their shares then was $2.22. So right now, if you are seeing the share market's price lower than $2.22, you're actually buying in a rate cheaper than what investors paid for that acquisition. To balance the books, they've actually sold away Bedok Point, Anchor Point and UT Point. So from this exercise, you can see they know how to buy assets and sell them off and balance the books and grow their portfolio over time. News just came out, they have actually sold a stake in a Malaysian REIT, and that brings in about $30 or $40 million. But the good work does not end there. Just very recently, they've actually sold Changi Centrepoint for $338 million. This was actually bought in 2014 for $305 million, which means the selling point of $338 million nets $33 million in terms of profits, correct? But take note again, this is over 9 years. So we see in terms of the gross value, that equates to 1.148% per annum only. Of course, for properties, that's leverage. So the actual real return on the capital is higher than that. But out of curiosity, I went to look in terms of the latest numbers that this mall was valued. To my surprise, it was only valued at $325 million. And this was from the last annual report, which means somebody actually paid above valuation for Changi Centrepoint. Selling off this property meant that Fraser Centrepoint Trust will get an influx of cash, correct? And this will allow them to bring down their gearing ratio from 40.2% all the way down to 37%. Round of applause. I think that is a fantastic move to balance the books, especially right now interest rates could climb even higher. So at 37%, I think Fraser Centrepoint Trust has one of the lower debt equity ratio. But in the first place, why did it shoot up to 40%, correct? Because from what I recall, they were once a very conservative REIT, with their track record of debt equity hovering around 33 to 35% for the last 5 years. The key reason for this big surge in terms of leverage? Next Mall. This was announced in end of 2022. Fraser Centrepoint Trust, together with Fraser Property, would acquire 50% interest of Next Mall at a price of $652.5 million. That is the reason why they've taken on so much debt. But I do actually like Next Mall a lot. The purchasing price allows them an entry in the region of high 4%. So comparing Next Mall against Changi Point, I think I quite prefer Next. So it's a no-brainer for me. I think the growth of Next in terms of what you earn in terms of rent is going to be very strong, at least for the next 10 years. We see a lot of BTOs now building up, correct, in the Serangoon region. And every time I go to Next, I think it's a very crowded mall. Speaking of which, let's move on to the third chapter of today, which is what are the risks of owning shopping malls versus other kinds of properties, especially if you are looking to do REIT investment. For shopping malls, do note, they are very heavily dependent on the F&B industry. Let's pull up this summary table. You would realize that F&B contributes 37.4% of total gross revenue. That's even though they only occupy 29.8% of the net leasable area. This summary table actually teaches us one thing. If you compare food and beverage against supermarkets, for example, you would realize that supermarkets occupy 11% of the mall, correct? But they only bring in 6.2% of gross revenue. That tells you that their average per square foot rent is actually cheaper than F&B. And that's logical because every mall needs a cold storage, NTUC, Sheng Siong as an anchor tenant to draw in the crowd. We go there to eat and at the same time we want to do our grocery shopping at the malls. So that's why supermarkets pay a lower per square foot rent as compared to F&B. I've once done an F&B business many years ago selling ice cream, and I can clearly say that it's much better to be a landlord than actually running the operations. And from my experience, I can share also that usually we sign contracts which is 2 plus 2, 2 years plus 2 years. If you compare against, for example, logistics properties, you realize that their kind of lease is 6 years, 7 years, kind of a time frame. So for shopping malls, the lease contract is typically 1, 2 or even 3 years. So does that mean that there is a lot of risk owning such properties? I actually don't think so. Look at this chart over here. You would realize that traffic has always been strong in Singapore malls. Recent results for Fraser Centrepoint Trust in terms of their tenant sales is significantly higher already than in pre-COVID. That is the graph on the right. That is how much money their tenants are making. Shopper traffic being lower, that's not too much of an issue. And I think you're going to say this. Is it due to e-commerce competition, correct? Maybe I can dispel that myth once and for all. This is from July 2023 government statistics on retail sales. You would realize that some segments, especially computer and telecoms equipments, as well as furniture and household equipments, These things are increasingly purchased online. However, for supermarkets and F&B, the online segment has clearly stagnated. They are not overtaking the physical purchase that we do in malls. Hopefully I've given you a good explanation of Fraser Centrepoint Trust. And linking back to how we started this video, invest in what you know, never invest in a business that you can't understand. Retail malls are very easy. Their fundamentals, as what I've shown you, are very strong. The current yield for Fraser Centrepoint Trust is around 5.3% right now, and that's why I rate it pretty highly. Let me know in the comment sections whether you agree or not, and smash or subscribe, especially if you like content like this that helps you in your investment journey. And again, a quick shout out to JOSH TAN Finance Summit. Grab your tickets real fast, and I'll see you there too. Take care as always, check out these videos. Signing off from here, goodbye.